Good morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading week. Let's kick off with our top story. The country's economy likely remained in recession in the first quarter. A Businessworld poll of 18 economists yielded a median contraction of 2.6%, easing from 8.3% in the fourth quarter of 2020, but still slower from the slump of 0.7% in the first quarter of last year. If realized, this would be the slowest decline since the first 3 months of 2020 when Luzon was placed under enhanced community quarantine. The country's GDP posted 4 consecutive quarters of a contraction last year, with full-year GDP slumping by 9.5%. That contraction was the worst since the PSA began collecting data in 1947. Analysts agreed that the recently imposed stricter quarantine measures in NCR and nearby provinces had an impact on the recovery. ING Bank Manila senior economist Nikki Mapa sees a contraction of up to 3.5%, saying household consumption is expected to have been challenged at the start of the year and consumer confidence remained deep in the red. First quarter GDP figures will be released tomorrow, that's May 11th. Okay, guys, kicking off Monday's report with a quick virus check. Worldwide global COVID-19 cases now at 157.9 million, with deaths exceeding 3.28 million. On the upside, there have been more than 1.29 billion vaccine doses. And here we see another day below 10,000 cases, the last sprint rising by 7,174. Now, over in the U.S., the new cases dropped to the slowest pace since the end of September. Now, in the UK, more than 1/3 of the adult population is now fully vaccinated. 2/3 of them have gotten the first dose, and there the infection rate has reached its lowest level since September. So some bright spots there. Spain as well has announced the easing of restrictions. However, of course, you've still got a lot of problems in India. Over there, the capital, New Delhi, extended their lockdown for another week. Stricter controls, more than 4,000 COVID deaths for a second consecutive day. And on the vaccine saga, the European Union has not renewed their order for the AstraZeneca vaccine beyond June. Meanwhile, on the home front, we are awaiting the 9:30 p.m. arrival of the 193,050 doses of Pfizer today. Now, Health Secretary Duque did mention this would be sent to NCR, Metro Cebu, Metro Davao, and anywhere where we can actually store the vaccines at negative 80 degrees temperature. Let's take a quick peek at the opening of our bourse this Monday morning, closing in just a little bit till 6,300 there. We are up by a hefty 0.7%. That's welcome news after, of course, we slid throughout last week. And one sector to be in focus on today are the banks. I'm just going to refresh those banks for you here. But that, of course, is in focus when the BSP will be holding its policy meeting. That's supposed to be actually on Thursday, but may be moved depending on whether Thursday will be declared a holiday for the Eid al-Fitr. Businessworld's poll last week showed that 15 out of 17 analysts have the view that the Bangko Sentral will remain the record low of 2% for the overnight reverse repurchase rate. Only 2 out of the 17 are actually seeing a rate cut. What are they saying? They're saying that the scope for the rate adjustment is limited, particularly since inflation continues to exceed the annual target. They mentioned that the focus should be right now on the fiscal policy. Still, the Bangko Sentral has said that on their latest report on the second semester of 2020, at least, so that's the second half of 2020, they mentioned that the banks remained stable and resilient. They have maintained the capital adequacy ratio. Now, recall that banks are supposed to maintain capital, which is above 10% in the BSP's regulation. And for the international settlements, that should be above 8%. And they're saying that the banks are actually, at least for the big banks, improving in capitalization. That's between 16 to 17.1%. Now, meanwhile, to comply with the reserve ratio requirements, the banks have also extended nearly 200 billion pesos worth of loans to the SMEs and the large firms, as according to the BSP. Now, what did the BSP do? Recall that as part of the COVID-19 measures, they allowed the banks to count the loans to the MSMEs and large enterprises as part of the Triple R compliant. So they have been using this, and you can see the financial space up by 0.5%. And of course, one other thing to be watching out for here, the property sector, which will be very much affected by the rates. That, however, is you can see the 1 month is down by already 6%. And this morning is also enjoying a bit of a bump up by 0.7%. Now, here to share with us his views on this week's trade, we have with us Chris Mangun of AAA Equities. Good morning, Chris, and welcome to the broadcast.
Hi, Danny. Thanks for having me back.
Chris, a little bit of lackluster trade last week. We broke below the 6,300 level, which was very critical. Where are the risks tilted now? Of course, you had, a slew of bad news, the cases, the quarantine measures and the restrictions. Now we seem to have digested that, or is there still some scope for a pullback?
Yeah, well, I think right now what's mainly driving the decline is this huge uncertainty risk. So investors are well, basically learned their lesson from the last rally. Some were a little bit too optimistic, in my opinion, which uh, which really pushed the market way above where realistic valuation should have been. Uh, we saw several uh, blue chips. We saw several blue chip stock prices recover to 2019 levels, while their business hasn't recovered to that level. So I think investors are giving more weight to the uncertainty risk, and because of that uncertainty, it's becoming extremely difficult to make an accurate projection, even in the short term. And that's why there's a risk off sentiment right now. And the market may continue lower, but in my opinion, I'm confident that investors should now start picking up shares as we may see a rally sooner than later.
Okay, Chris, were the movements knee-jerk reactions to the number of cases, to the vaccine saga, to economic indicators like inflation, or is this a persistent trend that is revaluing the markets after, for example, the first quarter earnings and GDP projections?
Yeah, well, I think basically all economic data for the first quarter has already been priced in, and the reason I say that is because of the decline of the market. If you look at the PSEI, it's down about 14 to 15% from the beginning of the year. That's huge. Of course, we have to consider that it was at it was way above where it should have been, and because of that, the decline was steeper and has taken much longer. But considering where it's at right now, I think most of the data has already been priced in. Like I said in my weekly report, most are expecting GDP to contract for the first quarter. I mean, which keeps our economy in a recession. But some analysts also think that we're going to see some growth. Now, either way, investors. I mean, if it continues to contract, investors have already expected this, right? But even
Mm-hmm.
if it comes in with some growth, it won't have much of an effect because of the tightening of restrictions in April, right? So I think investors are gonna wait for more concrete progress or more concrete evidence that
Mm-hmm.
the economy is on a real path to recovery instead of speculating on the progress as we go, which is what we saw last year, when most expected that by now we'd have some sense of normalcy.
Mm-hmm. Chris, is there some sort of signs of this real progress when you look at the first quarter earnings? Of course, it was a low base year for 2020, so some performed much better than had been expected. But can you say that you could actually see some sort of resilience here, agility that's going to push some companies to perform better? And which ones surprised you?
Well, in terms of first quarter earnings, I don't think there was any. I wasn't surprised by any of them. Bank revenues remain strong, although earnings are subdued because of the allocation for the NPLs. But I mean, if you look at the numbers, they're really performing even better than before the pandemic. Now, retail food manufacturers are also resilient, and the weakness in property and the rest of the sectors was to be expected. So I don't think there was any real surprises. And as the market has declined, I think most of it is priced in. Now, um, the concrete evidence for the recovery is really going to come down to that inoculation. So
Okay.
we've even seen several companies talk about it. In the recent Robinson's Land disclosure, their optimistic 2021 recovery relies on the fact that the vaccination goes well. So I think that's true for the economy as a whole, and it's gonna be interesting what happens in the next few months as this inoculation speeds up. We're seeing the West. Uh, I mean, since the most countries in the West have already taken a big step forward on the vaccinations, and a lot of their people have already been vaccinated, we're going to see a shift to Asia on and to the smaller countries to be able to end this pandemic that we're still in, sadly.
Okay, Chris, just one question here. I just wanted to report here as well that the ADB has now said they will be dropping coal investments. They may support more natural gas projects. And you can see in my terminal here, FGen and ASEN, performing at least much better than the rest of the other stocks here. Is there, is this just speculation because a lot of these projects of renewable energy are not yet online, or is there a real business case here for these stocks during pandemic to be focusing on things like renewable energy?
Yeah, so there's been a global trend of shifting to renewable energy and more sustainable business practices. We've seen it over the last decade, right? Now, as the technology improves and the it becomes cheaper and more efficient, we're going to see more and more investment in this area. And to encourage that investment, uh, you're going to see market share taken from these traditional fossil fuel sectors. Now, that isn't to say that the fossil fuel industry is going to be gone anytime soon. I just don't think that's possible, especially for the developing, emerging economies. But the trend really has been the shift to renewable energy, and it's even a great trend in the stock market. You're seeing investors favor these sustainable companies, and because of that, you're going to see more companies go into the space. I mean, ASEN has really been aggressive in the last couple of years in terms of what it wants to achieve. You're going to see other local players like Aboitiz Power and FGen follow suit. So I think this is a big growth sector for the Philippines. I mean, a big growth um, sector for the
Industry.
Philippines. Yeah, for for
Mhm.
for our for our energy requirements, because we have one of the most expensive in the world. So it's going to take more creativity and more innovation to deal with this and to find a solution for this problem.
Okay, so not surprising there why investors are pouring their money in. But of course, as you mentioned, coal will not be disappearing anytime soon. Risks still tilted to the downside here until we get some clearer results on the recovery. Thank you so much, Chris Mangun, AAA Equities.
Thanks, Danny.
Checking in on the biggest headlines we're following this morning. Let me just scroll through that. Apologies for this. Okay, the government is looking to further reopen some industries in MECQ areas to allow more people to return to work. The Philippine Star reports that the IATF will make adjustments to the list of establishments allowed to operate under MECQ by June. Now, should the MECQ be extended beyond May, Cabinet Secretary and IATF Co-Chairman Carlo Nograles said they will determine which Category 4 establishments can be allowed to operate. Among their top choices include gyms and fitness studios, internet shops, entertainment and amusement industries, libraries, museums, and even tourist destinations. Nograles said they will prioritize industries that will generate jobs while remaining safe and protocol compliant. Still, he said it would be so much better if the NCR Plus will be downgraded to the less stringent GCQ by May 15th. And if that happens, Tourism Secretary Berna Romulo Puyat says the government should lift all restrictions on leisure or non-essential travel in the region. Puyat said tourism stakeholders can no longer afford an extension of the policy that prohibits NCR Plus residents from going on non-essential trips. Romulo Puyat noted that leisure travels from NCR Plus to any destination in the Philippines should be allowed. That's as long as travelers subject themselves to COVID testing beforehand. Now, the Senate is still consulting government agencies and the private sector on the need for a third stimulus package. That's despite the aggressive push for the bill at the lower house. Senator Sonia Angara revealed they may hold one hearing on the matter in the coming weeks. This as Senate's version filed by Senate President Pro Tempore Ralph Recto remains pending at the committee level. Meanwhile, Businessworld reports that the Budget Department admits that it is still trying to find funding sources for the 405 billion peso Bayanihan 3 bill. Citing a radio interview, Budget Secretary Wendell Abisado said they're not opposed to the measure, but their primary concern is finding the money for it. And the SEC is flagging 5 entities for offering unlicensed investment programs to the public. You can see that on my screen here. These include Hedge Trading, Coco J Funds Corporation, Coco J Funds Digital Marketing, Seven Stag International, and MERS Business Center. The SEC says that the first 3 companies are all not registered with the commission. They also have no licenses to sell securities or to collect investments. Meanwhile, Seven Stag International is registered with the SEC as a corporation. However, it is not authorized to solicit investments. And lastly, MERS Business Center Operations is tagged as a Ponzi scheme. Businessworld sought comments from Hedge Trading's Jonas Lapada, Coco J Funds head Jesse Himor, and MERS Business Center's Roger Kamingawan, but no one has responded as of yet. Meanwhile, links to Seven Stag International's Viernon Suming's Facebook page no longer work. And that's a first look into the business day. Today is Monday, May 10, 2021. Catch Businessworld Live for the market close. That's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.